What's up, everybody? Welcome to Solana Weekly. This is your host, Thomas, and I want to thank you for joining in. Let's take a dive into the latest trends, use cases, and people behind the incredible growth of the Solana ecosystem. None of this is financial advice, but I'm hoping that all of this is alpha. Now let's get to the show. Today, we've got Sid on from Nirvana Finance. I am super excited to hear about everything they're building. I've been testing it out myself, and I want to give you a warm welcome to the show. How you doing, Sid?
Very, very good. Happy to be here.
Yeah, happy to have you on. It's a good day in Solana. We got ourselves an ETF the other day. I feel like things are moving forward, so I'm pretty excited. I'm pretty jacked up this morning. How's everything going for you?
Oh yeah, ETF, X stocks,
Yeah,
25 new launch pads. Never a dull
yeah,
moment.
yeah. We got the bonk coins are going up, and I currently own one Tesla stock in my Phantom wallet, so I'm pretty excited about that.
Well, I hope you bought it with fart.
I mean, that's the only way you can do it, right?
It really is, just for style points. You might have like USDC, but just swap it over really quickly, just to say you did.
Yeah, yeah. Man, this fart coin is something else. I feel like I avoided it for a long time, and it's just so funny every time anybody brings it up. Like, it's just not going away, is it?
And there was a time where I was doing a technical analysis on its chart for some like margining engine, just running through different scenarios. And then here I am calculating the VAR of Fartcoin, and I had to take a step back and wonder how my life led up to this moment.
Take a nice long look in the mirror. Think, what is going on?
It's just numbers. That's what I tell myself.
Yeah. There's a lot of craziness going on in Solana, right? It's kind of what keeps it fun, but there is a little bit of madness. And I feel like what you are aiming to do with Nirvana Finance is kind of provide a lot of the opposite of that, right? Kind of more of a transparent, open store of value, if that's even the right direction, if that's right.
That is right. You can think of it like this, that value is speculative. You
Yeah.
buy Tesla and you're speculating. That's always the case. And that's true of a vaporous meme coin that's puffed up on nothing but hot air, like Fartcoin too. There's nothing wrong with speculation. Calling it gambling, calling it a grift, that's just exaggerating. It's all shades of gray at the end of the
Yeah.
day. Even gold is speculative. Even the US dollar is speculative. There might be a big war and inflation goes up. Who knows? Speculation's not the problem. But what we want to have are seatbelts on the car or pads and helmets that the football players wear. You play the game, embrace the game, buy low, sell high. That's the way the world works. But it doesn't need to be so dangerous. It doesn't need to be prone to catastrophe and disaster the way it usually is. What Nirvana does is adds the seatbelt in. It doesn't stop you from driving. It doesn't stop you from driving fast. It doesn't mean that a token can't be wildly volatile, but you can have safety rails on it. So the worst case can't happen. The worst case in finance usually takes one of two forms. Either a bank run kind of scenario where leverage deposits evaporate because they weren't there. It's just this chain reaction of liquidations and bad debt cascading, and poof, everything's gone. And the second kind of problem you run into with speculation is it was actually just a grift, and you get a 99% drawdown in 10 minutes. I guess sometimes we call those rug pulls. That's not a problem which is entirely circumscribed to the world of crypto. You see the same kinds of issues come up wherever there are markets. But you can solve for both of those and have speculation, have value appreciation, have yield, have all the things you want, but none of the looming disaster, not this feeling that there's a sword of Damocles hanging over our head, which could drop at any time. I think the thing that people like about Nirvana most is just the emotional tranquility that you can sleep at night. You don't have to worry and monitor quite as much as you do with other things.
We've all been there, especially with meme coins lately. You fall asleep with a large meme coin position, you're not really sure, what you're going to wake up to the next morning. I feel like crypto, like you said, this happens in traditional finance, but I feel like crypto is kind of like an accelerator on this where it shows you the extremes a lot more, right? Just because everything is so liquid, everything trades 24/7, there's one big seller could nuke a market pretty much, right? So there is a lot more like extreme circumstances around tokens in crypto. Is that right?
Mhm. Yeah. The problem is that crypto has done an amazing job at being transparent and immutable and tamper proof with everything except for value. The principle that crypto started on way back in 2008 was let's eliminate fraud with sunlight. Let's have a public ledger. Everyone can see everything. You can't hide anything under the mattress. You can't stick your thumb on the scale and tamper with it. That was the idea. And in the very first paragraph of the Bitcoin white paper, it had one goal in mind, which was to eliminate fraud. Yet I suppose the definition of fraud is just lying, hiding. Something is going on behind the scenes in the inner workings that people are not privy to. That's a good principle. It's a powerful principle, but we haven't really gotten beyond the ledger when it comes to applying that principle. Blockchains store facts. Everything about proof of work, proof of stake, this, that, the other thing, L2, economic security, yada, 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 is about this problem of how do you store a fact? Who has what? But crypto has not moved the horizon forward to store what something is worth. The worth of things, the value of things, is still tucked away in some shady inner workings of markets that nobody fully understands. Now, when you talk about volatility with meme coins, the thing that's going on is that people are not aware of how concentrated the supply is. And so somebody could just sell. Most people are not aware of what it means for a market to be solvent or liquid. How much volume can it sustain before the price nukes? Leverage usually happens way in the background, and it's the purview of risk departments and committee meetings, and then they make bad decisions, and you get cascading liquidation that wreck the whole ship. These are things that haven't been cryptoified yet. There's no guarantees around them in the same way we have guarantees around the ledger. There's no transparency around what's going on in the way you have it with the ledger. The Nirvana approach is to take crypto's principles of algorithms, not humans, which is another way of saying trustless, which is another way of saying transparent, which is another way of saying permanent. Algorithms are just rules that everyone can read and understand. Apply that principle to the problem of value. If you're holding on to an asset, you want to know what this is truly worth. Another way of phrasing that question is, what could I sell it for? Are you just a paper millionaire? I'm sure we've all run into this where you decide to sell one day and you realize you can't. You try to sell $50,000 of this and the price goes down 20%. That's a real problem. And we can get into how Nirvana solves that problem. I'll just summarize that to say the problem we have not solved is having a crypto native store of value.
Say if
Yeah.
if you don't mind me hopping in, I would say it's been particularly troublesome on Solana as far as a store of value. I mean, you have uh, totally going on Twitter saying that the Sol token is not a store of value. We've been so well integrated with USDC that I think a lot of the players or a lot of the traders and people on Solana in general trade out to USDC and they trade out to dollars and they value everything in dollars. Where I don't think that that's necessarily the best way to do everything, right? That's not what crypto's all about, is just a better form of the dollar. And I've been excited about bringing more quality assets onto Solana, right? So, better integrations with like Wrap Bitcoin, and even like you mentioned stocks, like those, have businesses that make real money. And, I mean, Bitcoin is kind of, it's held its ground as a store of value. People debate whether that's a meme or not, but it's worth $110,000 today. So I don't know. Is that like the problem that you saw? Was it specific to Solana, or is this just like specific to crypto in general? You're like, hey, the store value is kind of messed up.
Oh, it's definitely crypto in general. The inspiration for this kicked off 3 or 4 years ago when I got to peer behind the curtain for the first time as to how crypto works.
Uh huh.
I was still working full time in big tech at Google. It was 2020, 2021. I was curious about crypto. I was starting to, hey, I understand numbers. I understand how to code. This Aave thing looks interesting. Huh, you can just build apps that connect to it. Okay, I got seduced by it and started building DeFi apps just for fun, just as experiments. I won a hackathon with Solana, and they flew me out to Lisbon for Breakpoint. And it was 2021, which, if you were there, you remember to feel pretty euphoric, pretty toppy at this massive
Yep.
conference. And there were like 7 VCs to every developer there on the grounds. Nothing against VCs, but the feeling was that so many people just needed to hear, like, oh, you placed second in the hackathon. Here, would you like $50,000 for your project? It's a very interesting and humbling experience. And I was very taken aback by it. And I was especially taken aback when I kept insulting people's sensibilities when I would say, I don't even see a need for a token for this project. I'm trying to do lending. Why would there be a token? And the VCs looked at me like I was radioactive for even suggesting that. And then they're like, hey, let me introduce you to some market makers, to put the dollar signs in your eyes. And I was learning how this industry functions. It took a swerve with ICOs, and I don't feel like it's really recovered from that yet. There's been this venturification of crypto projects with pie charts and allocations and pre-sales, and it all seems very dangerous and distasteful. The game is to launch, attract retail investors and then find a way to exit. It just sounds like a SPAC or a scammy kind
Yep.
of ETF. And when I was disillusioned and the scales fell from my eyes as I really saw how the sausage gets made in that factory, I came back home and realized that the real problem to solve here is how tokens work, is how value works, is how assets are created. So you say, Sol is not on the record for being a store of value. ETH is not a store of value. ETH is kind of floundering for a narrative. The reason is very, very simple. It's that it was printed out of thin air. It was printed out of thin air. When it was bought, when it was invested in, way back in the day, people just gave themselves these tokens out of a digital piggy bank. You can print as many as you want, give them away. You just come up with a value that's arbitrary, a valuation of a company. It's not a commodity. Shares of a company valuation is not the same thing as digital gold. And the idea that at the genesis, you would have a token commit this original sin of printing, a billion copies of itself and just giving it away to a foundation, that's something that you can't get over as an asset. That is going to follow you. That is going to hang over the value of it. And when insiders have something with no cost basis, that sets the precedent for something not having a cost at all. So that's the problem. Bitcoin got close to solving the store of value because of its purity. It wasn't some Genesis lock where the developer, gave himself oodles of this thing. It plays by its own rules. You know, it is inflationary in that more Bitcoin just keeps getting produced as a way to incentivize people to mine it. That's kind of a necessary side effect for how it does its economic incentives. But nothing about the Bitcoin algorithm, nothing about the Bitcoin program. I'm sorry, I'm hearing some crinkle. Is that me or is that you?
I'm hearing it too. Let me see.
Maybe that was you.
Maybe that was me. Is that gone now?
I think so. I've been
All right.
told that
Sorry
my
about that.
microphone crinkles. Yeah, we can edit this out, I
I'll
suppose.
I'll edit that out. Yeah. Sorry about that.
Okay, one, two, three, hoop, cut. Okay,
Back.
nothing about the Bitcoin algorithm has anything to say about the price of a Bitcoin. I also remember Tolley saying once on a podcast, this was another thing that inspired me, is he asked the person who was interviewing him, a smart guy, what would happen if Bitcoin were worth $1? Or what would happen if we forced the network to run on solar power? And the answer is nothing. The network would function just as strongly. Everything would operate as normal if Bitcoin were worth 1 penny as if it were worth $1 billion. There's
Is that
nothing
because
in.
the protocol is separate from the actual value of the token,
That's
right? Like
right.
there's Bitcoin the network, and then there's Bitcoin the token, where they're not necessarily like intertwined, right?
That's right. There's Bitcoin the ledger, Bitcoin the protocol, and Bitcoin the token. The fact that the token is worth anything at all is up to humans, not code. It's arbitrary. Nirvana is the cryptoification of value. It's to make the value of something algorithmic, based on code, based on guarantees, based on proofs. Bitcoin gave us proof of work. Nirvana gives us proof of value. So we're pushing crypto's principles into this uncharted domain. Can we apply the same dream of a tamper-proof, immutable storage system into value itself? And the end goal with this is to create a global scale reserve asset, something that actually makes sense for sovereign wealth funds to hold hundreds of billions of dollars of this and not be worried about liquidity crises, not be worried about a 50% drawdown or more. The storage of value in Nirvana is a permanent feature of each and every token, just as the property of a Bitcoin ledger is that nobody can steal your coins, not your keys, not your crypto. We can apply this principle to the store of value problem. And what this means is that you don't have to depend on a BlackRock or a Michael Saylor to keep things up.
That sounds good. So there's a lot there that I want to go over. So okay, I'm using Solana and Bitcoin as an example versus your token is kind of tough because, yeah, I mean, Bitcoins are given out to secure the network for mining and ordering transactions, right? And then Solana as a network uses the Solana token for security. And then it gives those tokens out for validating those transactions. Is that right? So those tokens are being used in a different way where it's like they're providing, based on the value of Solana, that's how much security you're getting for the network. Am I getting that part right?
That is.
Where you're not you're talking about tokens specifically, right? So if we took the network part of Solana out, the network part of Bitcoin out, and just talked about the tokens, there's nothing necessarily securing the value of those tokens other than the network. So
Yeah. So let's do a thought experiment. What if Bitcoin set itself up a little bit differently, where every time you pay a fee, it also goes to the token holders? So everybody's earning a dividend based on usage. A lot of Bitcoin transactions, everyone who's holding Bitcoin is collecting some pro rata share of the
So
fee.
it'd be sending those tokens out. I guess a similar idea to that would be burn a portion of that transaction fee as well, which I believe does, and I know ETH does with like EIP 1559, but there's similar mechanisms.
Yeah, and the reason that they burn it is because they're anxious about inflation. So they're giving with one hand, taking with the other.
Yeah, kind of
But
equaling it out a little bit. Yeah.
yeah, it all comes back to them wanting to incentivize the strength of the network. But I think this is a good question. Why didn't Bitcoin set it up that way? If you
Yeah.
held a Bitcoin, it would be yield producing natively. You would just get
Yeah.
more of it. And it's not more from inflation. but just from the fees. It's not even dilution. If you're an early adopter and you hold this thing and it takes off and people are transacting, you're just stacking paper all day. They didn't do that because their obsession is with strengthening a computer network. So all of the fees, all of the incentives, all of the economics are going into one problem. How do you get as many computers as possible interacting with this thing to make the network as strong and censorship resistant as possible? And good on them. But this is telling that the focus of blockchain development has been on the network, on the infrastructure. What I'm getting at here is crypto has not turned its attention yet to the problem of market value, of store of value. The analogy here holds. Ana, Nirvana's token, is obsessed maniacally with storing value in just the same way as these blockchains and their gas tokens are obsessed monomaniacally with strengthening a network, and the Nakamoto coefficient.
What does that part mean? So okay, so it's obsessed with the store of value, so it's constantly like okay, can you just explain that a little bit further?
Yeah.
Sorry.
Long wind up. The fees when interacting with Nirvana go to the Ana token. So here's the analogy. Fees are to the Bitcoin network as fees are to the Ana value. Anytime somebody is using Ana, buying it, selling it, using it for credit, the volume turns into real revenue. You're paying a fee to work with this asset, and that fee is going into the asset. It's the same kind of thinking that you'd have with setting up a strong blockchain. This is for setting up a strong asset. What if anytime you transferred $1 with a credit card, you pay a fee, but that fee goes to the users of the credit card, or it goes to the holders of the dollars itself? There are things we can do with crypto, with automated algorithms, you couldn't do in a traditional world of paper and gold nuggets. That opens so much possibility for building a perfect reserve asset. And that's the mission with Nirvana, is you sit and you ask yourself, if you were to make a global scale reserve asset, something that could be tens of trillions of dollars in scope, what would it look like? Thing number one, it's fungible. Thing number two, it's productive. It has yield. It has dividends. Well, where are you going to get that yield from? Fees, from usage. It's crypto. You can just deliver those fees continuously. You can settle the fees right into the token holder's hands all the time. Okay, check and check. Thing number two is that it's durable in its value. It doesn't go down very far. Well, we take that to the extreme, and Nirvana has a floor price.
Yeah, could you explain that part? I feel like I saw that and I was like, a floor price? This isn't an NFT. There's almost like some NFT aspects to it, right? Like you're minting a coin, you're buying it with USDC, and then there was a floor on it too. I was getting confused. I was like, am I buying an NFT here? This is actually the fundamental characteristics on a token, right?
Yeah, for those of you just tuning in, there were these things called NFTs. Maybe they're coming back. They were for some reason, vocabulary neologisms in crypto spring up like mushrooms after a summer rain. There was this thing called the floor price for NFTs. It didn't mean anything. What that just meant is that's the lowest price at this exact slice of time. Yeah. And tomorrow the floor price could be lower. It's not much of a floor if it goes down, is it? That just means the lowest price. In Nirvana,
there was a problem with it too because everybody valued their NFTs on the floor value of them, but you couldn't sell 100 NFTs at the floor. The floor was one or two bids or something.
Much of the narrative and vocabulary in crypto is driven by a inadequacy complex or anxiety. How do we value NFTs? Okay, let's just look at the lowest price and say that's intrinsic in some way. It's quite silly. In Nirvana's case, the floor is the floor. It doesn't go down. If literally every single token in supply, I mean that, every token that exists, look at the supply of the mint, that number, if all of them were sold back at once or over time, does not matter, the last token to be sold will be sold at the floor price. The floor can be thought of like a point of infinite bid. There's an infinite bid at that price level. Or another way to think of it is it's infinite liquidity, which sounds exaggerated, but there's zero volatility at the floor. So liquidity is infinite. It's a singularity. If you were to sell everything back, it won't go beneath the floor. This has an interesting effect on the economics of an asset. This is rather unprecedented. Rather than falling knives, you get bouncy balls. Because if the price gets near the floor, the risk goes noticeably asymmetric. You'd be seeing it 10% above the floor and thinking to yourself, well, the upside is technically infinite. It's an indeterminate upside, but the downside is only 10%. So I don't have much to lose and I have everything to gain. And you get this magnetic repulsion whenever the price gets near the floor. If the price were actually at the floor, the asymmetry of the risk is infinite. There's zero risk to the downside, and any number divided by zero is infinity. So instead of having panic selling, where the price is going down and it's going down more, and now I'm afraid, liquidity is drying up, so I'm going to sell, which pushes the price down again, and you get this uncontrolled nuclear meltdown chain reaction. You get the exact opposite. If it were to be the case that people just got tired of ANA for whatever reason, you can have this orderly exit for the door where everybody gets at least the floor price. The end.
Yeah. And I've got a question about this. So the floor price, like in my mind, if you're like a perps trader or leverage trader or whatever like that, you could have a stop loss on your trade. Say you put it, at 50% stop loss. You almost have that like built in naturally to your token where it's like, all right, the token right now is like $5.32. There's a floor for $3.68. The most I can ever lose is 40% or whatever that calculation is. Mm-hmm. So you almost have like a built-in stop loss on the downside, but as more demand comes in, that floor price remains there, but there's no ceiling, right? There is no cap on the upside, right?
You're totally correct. One clarification, the floor price doesn't always stay there. It also goes up. And it's more than tripled since launch. And if you want to feel Nirvana, that feeling of Samadhi, it's when the floor goes above your entry price. So for everybody who bought ANA at $2, well, now the floor is $3 and some change. They're never going to lose money on their initial capital. Of course, the asset is volatile and you get a little P&L every day, but your overall portfolio is going to be all P until the end of time.
So that's built in. So that's what's built in to the mechanics of the token, right? Yeah. That's kind of the magic right there.
And this is an answer to your question about what it looks like to obsess over store of value.
Okay.
That liquidity is a property of ANA. Value is a property of ANA. That's only of stablecoins, I suppose. No other token in crypto I can think of has value as a property of it. ETH has many properties. The dollar value is not one of them. You won't find that in code. If you're wondering about the dollar value of ETH, you are wondering about the mood of market makers on any given day.
So when you say value is a property, like just to clarify for me, that's saying like there is a floor price, or that's like within the token, there is a property that is going to hold the value regardless of the market.
Yeah, it's a grand unification theory of finance. We used to live in a regime where things were separate, where there are markets with liquidity and there are things that are traded on markets. They're two different things, protons and neutrons. But when you push science a little bit further, you realize that, these two things we call particles are actually made of the same stuff. They're made of, up quarks and down quarks or whatever. There's something unifying underneath them. The ANA token unifies liquidity and I guess you could call it a bearer token, like account. So if you have one ANA token in your wallet, that on a token intrinsically has, what'd you say was $3.23 of value in it.
Yeah,
No
something
matter what,
three
at
three.
least that much until the floor rises again, then it will have more. Another way of saying it has value intrinsic to it is that it has liquidity intrinsic to it. Because value and liquidity, they're two ways of looking at the same thing. It's if I were to sell it, what would I get in exchange? That's always a question of how liquid a market is. And the Nirvana market is infinitely liquid at the floor price. It's partially liquid above the floor price.
And that the example that you gave for that makes sense is you could sell the entire supply on the market at the time, and you would get the floor more than the floor price,
Yeah.
right? Like where a typical like, say we were talking about meme coins, and you were to try to sell 1% of the supply all at once, it would not be at the price that you're quoted. There would be slippage there. And if the coin was rising in value or lowering in value really quick, your slippage could be like 20% or more on a big transaction like that, right? Depending on the market, but that would you wouldn't see that on a.
That's right. Another thing about pretty much all other markets out there is that liquidity comes and goes. The market
Yeah.
makers giveth and they taketh away. Liquidity crunches are a real thing that precipitates financial crises because people get scared and they head for the hills and markets thin out and get way more volatile. The way Nirvana is able to do this is by being simple and being pure, in that 100% of the liquidity for this asset, the market itself, is not managed by humans. It's managed algorithmically. It's owned by a protocol, not a company, not a product, but a protocol, which is just a way of saying a math equation that does what it does according to verified rules. When you go all the way and you have 100% protocol owned liquidity, you can have this infinite bid because protocols don't have emotions. They don't get scared, they don't panic, they don't leave. And this is what I'm getting at, where all Nirvana is fundamentally is an application of crypto's guiding principle, which is algorithms over humans. Apply that to the market. If you could apply that to the market in the same way we applied that to the ledger, you get tamper-proof value in the case of Ana, just like how you get tamper-proof facts in the case of something like Bitcoin. There's a way to do this. And your incredulity about the floor price is not uncommon. When lots of people hear this, of course, the first thought is that it's too good to be true. I mean, I designed this and I still, get anxious. Oh, did I do all the math right? Surely, there's something missed here. Lots of people have promised this and, it doesn't work. It does work. And in fact, sort of out of boredom or impatience, we set up a campaign, a come and break it campaign called the Temple of the Floor, where I took an exact copy of the Nirvana program, but used a fake token, fake USDC for it. Is on DevNet. Exact same code on DevNet, but come and get all the fake tokens you want. You want $10 million of USDC? Here, pull it from a faucet and try to break it.
Mm-hmm.
We put a massive bounty if anybody could sell an ANA token beneath the floor price. We'll give you tens of thousands of dollars and I'll shave my head and eat a frog on live TV. Come and do it. No surprise. It was very
Yeah,
anticlimactic. Where we
yeah,
built this up over a couple weeks, it created this enormous demo of Nirvana, massive market cap. And then at the count of three, everybody panic sell. And we did this on a live stream, and everybody was just like, sell, 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 sell. And they crashed the price as much as they could.
uh-huh.
And then, oh, okay, well, let's move on now. The
Yeah,
floor
yeah.
held.
I love the way that you demoed that because I mean, that was one of the things that Solana did early on. I think it was like a break Solana thing where it was like, all right, spam us with as many transactions as you can and try to break us, right? It was kind of similar.
That's actually what seduced me to be on Solana. I was
Oh,
working
was
on
it?
Ethereum for a while. Yeah, I remember that. It was this vaporwave game. And yeah, worked like a charm. I was so used to the sluggishness of Ethereum, and I remember, yeah, clicking the spam button, and haven't looked back since.
Yeah. Oh, that's awesome. That's awesome. Okay. Now, when you were going through some of these terms before, I had a couple questions, but I want to preface this too with we had a conversation before we joined on here, and I just wasn't understanding a few of the things as I was using your protocol. And one thing that I typically tell guests on my podcast is like, hey, most of the questions that I get are pretty like introductory level. The reason why they're pretty introductory level is because I'm the one that's asking the introductory questions. I like to kind of like, play with the protocols and try to figure it out before. So I was running into some issues. So I had a bunch of questions for you there before we got started. But it seems like this is great. I apologize for those early questions, but
No, 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 not at all. You know what? Most assets, they want to launch fairly in some way. They don't want to, overly advantage insiders or whatever. I suppose the extended whitelist for Nirvana is just the bravery to use the app and
yeah,
figure it out. I'm in the middle of redesigning the app to make it more intuitive and streamlined, but think of it like a whitelist where you're intrepid enough to get in there and use it. You've earned your spot as an early adopter. I keep talking about Bitcoin, and I'm not going to change. Bitcoin also began in a very poor user experience environment where
oh
only the
yeah,
brave and the bold and the enthusiasts were interacting with it. It wasn't intentional, but that's just how it is when you're starting a new bit of technology. Like you meet at people's garages and swap motherboards and build computers back in the mid 80s. Only the enthusiasts do it before you get mass adoption. And Nirvana's asset is pure, kind of like Bitcoin, in that there was no ICO, no pre sale. We didn't mint a million of these things and stick them in a treasury. And what that means is that secondary markets, as much as they'd love to list this, as much as we'd love to see highly liquid highly liquid stockpiles of this on Binance or Dexes or whatever. You can't do it on day one
yeah,
because the people who have this asset are not themselves market makers. They're just holding it. That kind of liquidity that you find on a day one launch for a token is only there because it's inorganic. It says there was wheeling and dealing in a back room where you pressed a button to print $1 billion of this thing and move it around into people's wallets.
or even worse, you pay for those listings. A lot of times, especially newer tokens. I don't think it's as common now anymore, but you give up as much as like 10% of the supply of the token in order to get it listed on Binance. People on Binance Smart Chain love this because I think those fees went back to BSC staking a little bit. So it's kind of a sick world on the insider of that, right?
It's disgusting. And that
Yeah,
really is the origin story that I became aware of how this all works. I was just a technologist. I've worked in banks, I've worked at big tech companies, I've been around financial applications, but I was never in the smoky back room, how these deals are
yeah,
made. And my introduction to being a founder in Solana, threw on the floodlights for what kind of shenanigans and shadiness go on. That's what inspired this project was a feeling of disgust. It's like, wait a minute.
yeah.
This is just bad old traditional finance grifts and scams and fraud just grafted onto this crypto narrative. This is not the crypto that excited me. This
Yeah, I would also say that the beginning of Solana, probably that first breakpoint that you were at, like VC in general was growing, and like VC in tech was becoming a very big aspect of finance and tech. Like Silicon Valley was growing, VCs were becoming more talked about, and Solana was really like, I don't know if it was just the timing of it, but the early protocols on Solana got freaking nailed. Like they were terrible. Like a lot of the early tokens had the worst tokenomics you could ever see, and it was because the people were investing in it. they were doing exactly what you were talking about, right? They were investing in these protocols and then they were advising them on the tokenomics. What they would do in the tokenomics is they would release a ton of these tokens on the market. So you show up, you see a new protocol come on. And I know this because early on in Solana, I was farming these protocols and was like, why is anybody not farming radium or serum when you can get 300% return on them? These are fantastic tokens. Like, this is DeFi summer all over again. This is DeFi summer 2.0. Solana is the place. Every single one of those tokens went to freaking zero. Like, it was like the charts were down 95% within the month. FTX, they would go in, they would farm these protocols and then short them. Like, they would open up the perps for them so you could short them, and then they'd farm them on the other side and sell all those tokens down to zero. So in the beginning of Solana, a lot of those tokens, you'll see they were really, really bad tokens. And you'll see like FTX's balance sheet when they went under had like a large portion of a bunch of these tokens, like FIDA tokens, and I don't even remember the other ones, but it was pretty bad when it started. Right? And that's kind of why I think it took so long for tokens to really take off on Solana. Like, we didn't really see meme coins come onto Solana until, I don't know, Bonk was one of them, but meme coins maybe a year until it really started coming along.
Yeah, show me the incentive and I'll show you the outcome. And
I mean,
it's just kind of like a guns don't kill people, people kill people argument, where if there's no accountability and you can manipulate markets and sell people on a hope and a prayer, there will be people who take advantage of that. Not everyone's a bad actor, but as long as that's an incentive, that'll appear. And a guy like you probably looked at these tokens and understand this is not going to end well and steered away.
yeah,
And we sort of got to hand it to the folks at Alameda Research for being wiser in the ways of human psychology than we are and understanding how to take advantage of this. It's
yeah,
not good. Look, there are securities and there are commodities. There are shares of a company that is valued, and it's valued when capital buys those shares, and you can have equity out there with pie charts and vesting cliffs and whatever. It's fine to have equities, and crypto perhaps can be a good home for traditional companies operating in traditional ways with equities that are tokenized, functioning with smart contracts. But that's
yeah,
not new. There's nothing new about I'm founding a company, $20 million valuation. We're representing the valuation in terms of these tokens. Here's the fully diluted valuation. That's all just the same stuff that we've been
yeah,
doing since, I don't know, since the invention of the corporation.
yeah.
But crypto can also produce commodities. And that's what Bitcoin started with. And
Yeah,
I believe it is officially seen as a commodity. It's not a share in a company. There's no valuation of this. Nobody owns Bitcoin. This is what ANA is. It's not an equity. It's not a security. It's a commodity. It's not something that anybody owns. It doesn't have a valuation. Gold does not have a fully diluted valuation. Gold does not have shareholders. And crypto deserves to have something like a digital gold. One of the things I
yeah.
like
You're
about ANA is that not even gold has a floor price.
sure.
Do one better in the
That's
digital
right. That's
world.
right. And to even take that one step further, you can't even have good securities on, right? Like, the SEC specifically blocked tokens with utility, right? Like, if your token had utility, you were likely to get investigated by the SEC. So the tokens that we do see from good companies, even fantastic companies that are like the top protocols in crypto, the token and the equity of the company, they're separate. So what you're buying is essentially a coin that was launched by a top protocol. Some of them, maybe they'll buy some of those tokens back, but you're not buying equity in that protocol, right? Like, you're buying their token, and their token is separate from that, which I think it's terrible for everyone, right? Everybody wants to launch a token in crypto, but if you're just launching a token that has nothing to do with the equity of your company and it goes to zero and you have an amazing, like, one of the best protocols ever, people are just going to see the token and they're like, this is a bad company, right? It's totally mismatched right now.
One of the key distinguishing features of ANA is every one that exists because somebody paid for it. Every single token in supply has a cost basis associated with it, a real one. And it wasn't somebody paying for it in a pre-sale. It wasn't somebody paying for it OTC. They buy it through the protocol. They fork over money for it. And that's one of the reasons, among several, that you just don't see massive drawdowns with ANA. When everyone who holds it because they paid for it, it's precious to them. There's real cost. You can't say this about things that were airdropped to you. You can't say this about freebies, giveaways, bribes, or pre-sales where you get some sort of sweetheart deal buying 80% under the fair market value of something. Everyone's playing the same fair, transparent game. Everybody. This makes it very challenging to operate this as a company among companies, because I want to market it. I want to pay for animated explainer videos. I want to do the business development, and you got to fork over tens of thousands of dollars to an aggregator like CoinMarketCap to get it listed on there. There's all that highway robbery. All this stuff costs money. So it's difficult to do this in a pure grassroots way, where you don't have a war chest or you're not giving yourself tokens out of your own piggy bank. But this builds a strong foundation. It's the same kind of foundation that Bitcoin built, brick by brick. Strong things grow slowly.
Yeah. Yeah, I agree. And I mean, it's tough because a lot of what's in crypto, it's like, hey, come check out this Ponzi. I made a 100x on this. Maybe you can too. And a lot of that's kind of bad for the space, right? If one person's making 100x, the other person's losing 100x, like, it's not like a positive sum game that they're playing, right? Like a very zero sum game where one winner, one loser, right? You don't want to be on the losing side of that. There seems to be a lot of losers in the space where it's like you're coming from it from the exact opposite end.
Crypto has a reputation, and the reputation is quite deserved, I would say. The space is rife with these kinds of fraudulent activities: get in, get out, get rich quick, big dumb casino. All this stuff is true, and we know it. But there are a lot of people who also understand the promise, the principles, the idea of this, and feel maybe a pain of nostalgia. Or like, well, you've massacred my beautiful boy. Crypto used to stand for something, and it's being co-opted by the same battled kind of practices that it was trying to extricate itself from. And again, there's nothing, maybe I shouldn't be so quick to dismiss that. There's really nothing wrong with traditional finance as such. It's just, if crypto is going to be something, it needs to be something different. Otherwise, you might as well be regulated finance. What is the point of having these disintermediated automatic blockchains? People would be better served just buying traditional equities and assets that have the backing of oversight committees to make sure that fraud isn't committed. So if crypto is going to be something, it should be something different than what's out there. And that's the cue for Nirvana. I'm sure you understand what it feels like working in this space, that it's a little dangerous for one's reputation. Working in crypto can be like getting a face tattoo when you're young, and like you think it's cool and that it's going to get you laid and you're going to be popular, and then 20 years later you've still got this face tattoo following you around, and maybe job interviews don't go as well as you'd hope they would. Working in crypto can have that connotation, and one thing that drives me personally with this is to be able to stand up for what I believe in and build a project that I'm proud to sign my name on and say, this is standing true in the original founding principles of this space, the ideology of this space. This is zigging while other people are zagging, and we're
Yeah,
devoted.
we want people to stay for the long term, right? When I tell somebody like, hey, like I'm really interested in Solana, I'd love for you to check out a protocol. Like that's great, but I'm not looking for them to like make a 10x in a day. The problem is the way that it typically works is, everybody gets so excited about crypto towards the top. You tell them like, hey, I've got a lot of bonk. I love the bonk coin. Check it out if you want. Sure enough, that's the top and it goes down, 40%. And then you have an awkward conversation with your friend about like, hey, why'd you tell me to buy this coin when it's going down? It's like, I don't know. Like it was going up at the time, right? Like we want to have positive outcomes in this space. We want people to be able to stay here for a long time. And it's assets like Anna that are going to be able to do that.
Yeah, and to be clear, people still make 10x in a day with Ana. Think for its market cap, for any coin whose market cap is several million, I think Ana is perhaps the best performing digital asset of the last 6 months or so. Of course, you always got to be careful with picking time horizons when measuring these things, but it's performing very well, and people have made very large returns on this. I want to be clear that the ambition, the scale, the scope of Ana is to 100 or 1000x. It can do that without getting lethargic and slowing down. Back to what we talked about in the beginning, all Nirvana is doing is adding safety pads on the game. It's adding the seatbelt, the bumpers. That doesn't stop people from playing football to wear a helmet. In fact, it's just the opposite. You can play your football even more vigorously. You can slam into each other with even more abandon because you've got that safety guarantee. That's what the rising floor price does with the Ana token. Let it be volatile. Let it be speculative. Let there be this kinetic energy and enthusiasm and the cycles of euphoria and bearishness. This is just a fact of life. And not to tip my cards as a philosophy wonk, but that has something to do with the name of the project. The whole impetus for something like Buddhism is just let's be real. Things go up, things go down. There is suffering in life. How can you have some kind of peace that endures through that? So in the case of Nirvana, that is a rising floor price. So every time there is a rush of euphoria, you hit a new all-time high, and guess what? So does the floor. And that locks in those gains permanently. You can have all the sugar rush of crypto and gambling, but not the same downside where you lose 90% over 24 hours. It introduces this kind of asymmetry. So again, Nirvana begins with this acceptance of the space, which is we are trying to create a digital reserve asset that is global scale. The ambition of Bitcoin is to flip the dollar in size. So is Nirvana's. The ambition is to grow as large and ubiquitous as possible. It has these features that do it in a way which provides guarantees.
And so I've got some questions about this. When I was first looking it up, one of the questions was like, why can't I find this chart everywhere? The chart isn't everywhere, right? It's Bird Eye, or the best place is probably on your site, right? Nirvana.finance.
Yeah, I'll get into the details of just what it's like. If you've never launched a token or a DeFi protocol, this is what it's like. There is inertia in this space. There's an old boys club. There's infrastructure that's built in a compounding way on what came before to create a new exchange from scratch, which is what Nirvana had to do. The market-making protocol is a new kind of protocol. It's a protocol that owns 100% of the liquidity, provides floor prices. It's the counterparty to every trade. You're trading with the... Anyway, building a new one of these in a small ecosystem that has a few preponderant dexes, it takes time to take your seat at the table. It takes time for something like a coin market cap aggregator to integrate with your brand new exchange. It's not easy to do. It's an engineering effort. And it's also especially difficult to do if you do not create a bunch of your own token out of thin air to sprinkle around like Santa Claus on all of these different exchanges. Usually, when people are launching a high profile asset, they're lining up all these market making arrangements so that on day one it's everywhere. But Nirvana isn't playing those games, so it's more of a slow climb. And the fact that we don't ourselves have a treasury of this token that we gave ourselves, it's just coming in as it comes in, means it's on us to take this ANA and it's on anybody. We're all equal participants in this, to take these ANA tokens and put them into secondary markets. So there are some secondary markets for this token. There is a little bit of liquidity on Radium, and spread it to other places, but it's all organic. It's all growing as fast as it can. So
Sounds
Bird
cool.
Eye is looking at Radium because that's what
Yeah.
Bird Eye sees, because it is just a piece of software that's integrated with whatever it's integrated with. It's not integrated with Nirvana's DEX yet. That's how it is today, and tomorrow it will be integrated with Nirvana.
Sounds good to know. So I get to your site. I do, you see the chart on there. It looks like you guys launched in December of 2024. Is that right? Yep. Sounds good. And then, so now my question here, the floor price, it's been $3.68 since January 30th. Is that because that was like the all-time high, so that set the floor at that price, or what? How exactly does that work?
You can think of the floor like liquidity held in reserve. And that liquidity only comes from people buying ANA itself. When you buy ANA, you're not buying it from another person, you're buying it from the protocol. You could think of the mint for ANA as also the market. This is very similar to how bonding curves work. You could think of the floor like a flat line in a bonding curve. If you're visualizing the price function for a bonding curve, it's a price that is held up by money set aside for all of the tokens in existence at that price level. The
Okay.
more people buy ANA, the higher the price goes. It's still a market. Buys push the price up, sells push the price down. Sells just don't push the price down beneath the floor. As buys push the price up, the reserves are swelling with more and more dollars. And at a critical moment, the reserves will pull out some of those dollars and put them into cold storage, supporting the floor.
That
What
makes
this
sense.
means in
That makes sense.
practice is when ANA hits an all-time high, the floor has enough excess dollars to ratchet upwards. And then if ANA's back down from all-time high, there's not new money going into the system. Money's leaving the system. So there's not more money to invest into the floor. It's
That
just
makes
that
sense.
simple. If after this podcast, everyone gets excited about this and decides to buy a collective $10 million worth of ANA, I need to do some back of the envelope math, but you might see the floor go up another 50%.
Makes
The
sense.
buys will just push the price up and it pulls the floor with it. I'm kind of waiting, tapping my toes for this to catch on because, yeah, if you do look at the price chart, you can see it working where the price just keeps going up and the floor just keeps following it dutifully. If people just decided to buy it and buy it and buy it, you'll see the price go up 2x, 3x, 4x, 5x, and the floor will go up 2x, 3x, 4x, 5x. It's an anti-Ponzi.
Yeah, it really is.
It's the
So
opposite of a Ponzi.
yeah, and one thing that you said there, so you're only buying it from the protocol, so you're not buying this peer to peer, right? Like, are you sending this, like, the only way to buy it is off the protocol? Is that right?
This is the stroke of simplicity. This is how you cryptoify markets. You make the market itself a protocol. The market, the protocol, is the counterparty to every trade. When you buy it from a protocol. When you sell it to the protocol. That's how Bitcoin works. When you transfer a Bitcoin, you're not trying to find somebody on the street and hand them a Bitcoin. You're interacting with a protocol. And the Bitcoin protocol isn't picky. It just follows the rule. You sign a transaction, you send it, I'll process it. That's how the Nirvana market works. If somebody wants to buy it, the price is set by the protocol. If somebody wants to sell it, the price is set by the protocol. And the protocol has an infinite bid at the floor price. It never gets scared, tired, or stressed. That's
But you
all you
can't.
have to do.
Okay. But you can't. Like I can't send that from one wallet to another wallet.
Oh, no, you
It's
definitely
it's
can.
just protocol. Oh, you can.
It's just if you want to buy it or sell it, you're buying it from the protocol. You can, it's a
But
token. You can transfer it, and someday this will be collateral in, margin exchanges, borrow lends. It's a very good collateral because it has a floor price. It's a token. It's an asset. Stick it in your wallet. Move it
so
around.
this is so this is the official like number go up technology that we've all been waiting for.
It is. It is. Well, it's number go up, and if number go down only a small amount. Yeah, it is. It is the WAGMI protocol. Like we
It's the
are
way.
all going to make it that if there is euphoria, whether rational or irrational, that euphoria translates into permanent value storage. That euphoria translates into gains that are locked in. Again, people bought this token for $1, and now the floor is 3 times that much. Their gains are permanent. All of this, my friend, comes from me, believing in crypto 3 or 4 years ago, hearing about how this can, make us all wealthy, or being electronic cash that can really be used, and realizing nobody's actually tackled that problem yet. Nobody's actually made a number go up protocol, a WAGMI protocol, and you actually can. The only thing holding people back, I think, is greed. As long as you let the protocol be the one that's accounting for things and you avoid the temptation of robbing from your own reserves, the math will just math. The
That's
floor
great.
will go up.
That's great. We'd love to hear that. And now there is a fee when you buy it or sell it, right? So there is a little extra fee from just like a normal transaction fee, and that's what goes back to the protocol, right?
Yeah, this is to align governance. So let me take one step back. Again, we're asking ourselves, what would the perfect store of value be? And by the way, there are not many candidates for that in the world. I don't know, silver,
Yeah.
gold, Bitcoin, maybe. I don't know. Well, I mean, time will tell. There haven't been that many things that are a store of value. Dollars are a pretty good store of value. The world is voting with their feet, and people tend to use dollars as a reserve currency.
Yeah.
What would a perfect store of value look like? Well, it should be fungible, portable, durable. It should store value. It should be able to be used as a unit of account. It should be an eligible collateral so that you can get credit, lending leverage based off of it. There's another thing that you'd want from a store of value, which is to be productive. It should be yield bearing in some way. Now, pretty much the only way you find yield in crypto, as in traditional finance, is either through rehypothecating it. You could lend. I mean, it's pretty much always just lending. Since 5,000 years ago when we invented this stuff, lending and interest is how you put your money to work. When you squint hard enough, that's how most things bottom out. Another thing crypto does is giveaways. It's like, here's staking rewards, here are bribes. We have an inflation schedule. We're just giving you more of the same token. That's how proof of work, proof of stake is incentivized. Giveaways. Okay. Ana provides yield through these fees that you mentioned. When you buy it, when you sell it, when you use it for borrowing, There are a few other places where there are just little fees tacked on. They're not meant to extract or slow anybody down, but they're meant to add productivity to holding the asset. So if you're holding ANA, you get a share of these fees. Going back to that thought experiment where, like, why didn't Bitcoin pay its fees forward to the Bitcoin holders? Wouldn't that be a nice world? Well, Bitcoin's obsessed with strengthening its value. So the fees go to the ANA token. Real fees from people who are really using it. So if somebody churns, they buy, sell, they're paying some fees, and those fees go to the token holders. This is how you add durability to it. There is an incentive to buy and hold for a long time. The longer you hold it, the bigger the dividend you're going to get.
Sounds good. I like that concept, and it's kind of the concept that ETH was going after for a little while, right? Like the ultrasound money, they passed this big protocol upgrade. It's called 1559, where it burns the fees. The more use of the protocol, the more fees, the more ETH gets burnt. So it was like a net deflationary asset. But this is like a better version of that concept. Am I understanding that correctly?
Yeah, burning fees is not the same thing as giving you the fee. If you want to fix Ethereum in one step, all you have to do is turn off the printing. The foundation could just burn all their tokens, say, okay, never mind, we're not stealing. We're just going to burn our tokens. We didn't earn them. We just gave them to ourselves. Just get rid of them and turn off staking emissions. That's all you got to do. And when you turn off the staking emissions, it just works this way. Anytime somebody uses ETH, they pay a transaction. Anytime someone uses Ethereum, the platform, they pay to use it with this token called ETH. And that token is shared out to the people who are validating the blocks. No more inflation, no more dilution, no more giveaways. The reason ETH burns is because they dilute. If they weren't diluting, they wouldn't have to worry about burning. And that would work. That's the way the internet works. People pay to keep their computers on and run their internet applications because users are paying to use those applications. ETH is an application. People pay to use it. The payments can go to the people running the computers, and you're done. All of this anxiety around the price of the token goes away. All the anxiety of being an Ethereum foundation holding on to, I don't know how much they have. Let's just say it's probably hundreds of millions of dollars. And they're thinking to themselves, we need to sell this to fund our salaries. How anxious must you be? Like you start out building a technology and now you're a trader and you're worried about the price of ETH. You can get rid of all of that. All you have to do is just not print tokens out of thin air. If somebody wants an ETH token, buy it. That's how ANA works. If you want it, buy it. And now you have an economically sound thing. This is how gold works. If you want gold, buy it. You don't hold gold and you're like given more gold for free. Thank you for holding gold. Every economy that's ever fails because they think that if we increase the money supply, we're going to juice the flywheel. We're going to stimulate the economy by adding more units of our currency to it. The emperor figures out, wait, I control the mint. I can just print more money. That temptation has always been there since the dawn of fiat. And unfortunately, virtually all crypto assets have fallen to that fiat temptation, which is, hey, we made this thing, we can give ourselves this thing for free. Or we're starting a new DeFi product and we want to juice the economy. We want to throw some gasoline on the fire, so we're just going to inflate the supply. We're going to give these things away. And these kind of stimulus bills, they always work in the short term, and they always fail in the long term. This is how currencies fail.
Yeah.
Inflation wins, like gravity. So Nirvana just sidesteps the issue. You want the ANA token, buy it. You don't want it, sell it. And there'll be a floor price. That's how you start what can be a true store of value.
Yeah. That's awesome. Now, do you think that the protocol could be on multiple different blockchains because it doesn't have its own blockchain, right? Like it's a function on top of Solana right now. Like, do you see this expanding to other blockchains? How do you view that?
Ah, thank you for asking. Yeah, the fact that it's on Solana is immaterial. Um, as a matter of personal history, I really enjoyed the Solana community and I enjoyed the promise of Solana, and the name Ana came first. I wanted to create something that paid homage to Solana. Like we have Sol, we should have an Ana. And the name Nirvana and everything, all the branding that came from that was just backfilled from knowing I wanted to make a token called
Works
Ana.
right. Yeah.
Um, it's just an algorithm. It could have been on any blockchain. And blockchains are also not really the separate kingdoms that we think that they are. USDC is just USDC. It can move anywhere. Bitcoin is just Bitcoin. It can go anywhere. The brand identity of blockchains is kind of an artifact, and it'll fade into the background, just like, you know, people don't really care what kind of operating system an application is using. Is it Windows? Is it Linux? Who cares? I just want the app. But we are on the precipice of a very large expansion with this, where Nirvana is the store of value. It is pure, it is austere, it is built for scale and everlasting durability. But the idea of having floor prices, the idea of having markets without market makers and leverage without liquidation is an idea that deserves to be expanded. And we are about to launch an open-ended stepchild project called Samsara, which is the nirvanification of everything. So the ANA token is backed by US dollars because that's about as rock solid a collateral as exists in our solar system. Samsara will use any token for a backing collateral. You mentioned Bonk. We can have nirvanified Bonk with a floor price and a reserve comprised of Bonk. A token which is like ANA, but it's in terms of Bonk. And you get this black hole floor reserve that's sucking in all the Bonk tokens to build this massive rising floor comprised out of Bonk. You can do the same thing with Sol, and indeed we will. Or Jupiter's Perps liquidity token, JLP, shares of that pool. Or Trump, or FART, or the Radium governance token. It does not matter. There can be a samsara market for each and every one of these assets. And it also does not matter what blockchain you're on. This is going to expand into the EVMs. It will go wherever the hot ball of money burns. This is an exchange without market makers. And so the fees that it produces don't have mouths that need feeding. And the fees, among other ways, feed back into the Nirvana mothership. The idea here, besides just spreading the brand and awareness of floor season, is that we can take this algorithm, this product, this IP, and have it pay fealty back to the Nirvana mothership, where the fees produced by this expanding samsara ecosystem are devoted to market buying ANA all day long, like a robotic Michael Saylor that never grows tired.
That sounds fantastic. Okay, so I just to like recap where we're at. Like this sounds great. I like the audit token. It seems like you put a lot of thought into the way that you built this. There's, I don't know, there's something like 20% yield on the token right now. There's a floor, so you can't lose, more than 40% as right now. That's what the token is. What could go wrong? It's all based on math. Like, could the math be wrong? Is there like a something there? I don't know. Like, I feel like I need to ask that. I don't know what. It seems like perfect, but I just got to ask that.
The worst case is that ANA turns into a stablecoin. The worst case is that volatility goes down. Not that it
Just kind of,
crashes, but that it just goes flat.
yeah,
Is that a bad case? I don't think so because there are tens of billions of dollars of stablecoins out there. They clearly have a purpose. And Ana becomes a stable coin which has productive yield. See above how fees for usage get turned into dividends for the holders. So I think the worst case is that it's just boring. And that it's like a stable coin that yields, a high single digit per annum. As far as the mathematics of it, that's neither here nor there. And again, we ran this high stakes campaign. Like, please, can you break it so that I don't have to keep walking through the algorithm and the arithmetic and the geometry of this over and over and over again. 2 plus 2 truly does equal 4, and that's how it works. I suppose there are two ways that it turns into a stable coin in the worst case. One way is people just lose interest and it trades at or near the floor price forever. The second way it turns into a stable coin is we run out of USDC, and that all of the US treasuries that back USDC run dry and they all get absorbed by this black hole. Just go into this supermassive reserve and get turned into ANA, and there's just no money left to buy it. At
yeah,
that point, volatility also goes to zero because it can't go up anymore. We ran out of USDC. So if you look at the US Treasury market, you can kind of size within an order of magnitude what the size of it could be. A few $1 trillion.
yeah. I don't see that happening at all. That was a thought that came to my mind. I think that you
Well,
guys are well positioned right now in general. Like the way that I think the market is acting right now, it's like people are tired. They're tired from the trenches. They're tired from having to watch their portfolio 24/7, from having to deal with insane volatility. They want something like this. So in my mind, it seems like a pretty good antidote to what's going on in the current market, where people want a good portion of their portfolios in something that's stable. And right now we're willing to wrap stocks and bring them onto Solana just to find something stable, right? Like gold's coming on chain, wrapped Bitcoin's coming on chain. It's like we're finding all these weird, wrapped versions of potential stores of value to bring on chain, and they're seeing a lot of popularity, right? So to find a native token to Solana where that's not wrapped, that's not backed by anything like that other than just math is, I think, really interesting. So I think it's well positioned.
yeah, I really wanted this to be something that Solana is proud of.
Yeah.
Something that Tolley can bring home and introduce to his mom. I imagine it can be a little tiring if the best thing your chain has going for it is something like Pump Fun. This is something you can really, really be proud of, that we grew on Solana. It started
Yeah.
here.
Yeah, I think so too. And, I really appreciate your time. I know that we've gone well over the amount of time that we planned on. So I want to respect your time and definitely appreciate you coming on here. Anything, I know that you mentioned that you're going to be doing a rehaul of the site and protocol. Anything else that you guys have coming up here in your near future?
Well, we are pitching Tolley. The Nirvana is so grassroots and community led. The community came together to crowdfund a winning bid in an auction to pitch Tolley on an X space. That's coming up in about a week. That'll be coincident with launching the demo of Samsara, so people can come play with in a demo environment what it would be like to trade Bonk and X stocks, blue chip and shitcoin assets with floor prices. That demo should be live in about a week. Mainnet closely to follow, and Samsara summer and floor season will be upon us. So look out for that.
That's awesome. Yep. I mean, totally, that's going to be fun. I mean, he's the one that's always talking about stores of value and, makes fun of Bitcoin as, not being a store of value and all this stuff. So I'd be really interested to tune into that and hear. You said it's in 1 week.
Yes, yes. You're right. Often my cynicism, a good kind of cynicism, is something that falls on unwelcoming ears. I feel like Tolley is a very first principles kind of thinker, and we could see eye to eye on a few things.
Yeah, well, and I mean, tinkering with the way that tokens work, I feel like has been a big topic of what he's been focused on, at least on Twitter. Different launches or launchers that can't be sniped, like stuff like that. I feel like he's been tinkering with. It's like, hey, why don't you take it to the next level and like check out what Nirvana's doing? I think he'd like it.
Yeah,
So I'm interested.
he's driven, as some people are, by principles. What's my motivation? Why am I doing this? And when you have your principles square in your eyesight, the rest follows. And
Yeah,
Solana is a very principled project, and the way he talks about economics and politics, it also comes from a principled place.
yeah, definitely. Well, I'm excited for it. I'm going to tune in if I've got the time. That sounds like something that I definitely want to hear, and looking forward to all that you guys are doing. And I really do appreciate your time. Thanks for coming on the show, Sid.
Thank you. Have a great
Yeah,
afternoon.
all right. Thank you. You too.
Bye.
All right, thank you guys so much for tuning in to Solana Weekly. Once again, this is Thomas Bahamas, and I have one final ask for you guys. If you could, please subscribe on whatever player you're listening to. You could leave a review. That would be amazing. If you want to shill me your bags, work for them. But yeah, really appreciate it. And as always, this is not financial advice, but I want you guys to accelerate, move forward, and let's get this bag. I'll catch you guys next week.